All right, here we go. What I miss, what I miss. We got our drink, we got our little chocolate chip cookie. We're ready to check the markets and. Oh my god! Oh my goodness gracious! What has happened in the markets? Oh geez. We better come up with a quick strategy that you guys can employ to help your portfolio from getting absolutely annihilated on days like today. Let's, without further ado, zoom into the charts. All right, so what do we have here? Buy the dip, but this is the fifth dip this week. How do we expect it to keep buying these dips? Price just continues to go down. What else do we got here? Buy the dip with what? There's nothing left in the portfolio to buy the dip with. Honestly, I love when market sentiment is like this, when people are just fear capitulating and price just keeps dropping down lower and lower and lower. You can see this when we zoom in on the hourly time frame. Like, this is a chart that you open up and think, oh my god, oh my goodness gracious, what are we gonna do? Open windows? No, just kidding. Honestly, times of fear, when you're zoomed into something like the hourly or the 5 minute, you're gonna panic. You're gonna be one of those people capitulate and panic sell and dump the whole bag. And you really don't want to be one of those people in the market. So how do you know when the selling is going to subside? How do you know when to actually buy the dip so you're not, this person that is just out of funds when the dip comes because you kept buying what you thought was the dip and it never really was. So let's zoom out first off to kind of calm our minds. And we are still in this overall range that we've talked about. I have this line, this upper boundary and this lower boundary drawn. Actually might need to extend them because price is just continuing to interact between those two ranges. So let's kind of zoom in on lower time frames. Ultimately, I haven't really talked about this in a while because Bitcoin's been dangling in the middle of this range, which to me is a very obvious no trade zone. If you do want to trade a range, you want to short the top, you want to long the bottom. So let's kind of look at lower time frames to see if we can find anything on when we could potentially see a bottom. So let's first look at when we first broke down from this top without successfully closing above the former all-time high. We had this major candle here. This on the 4-hour time frame. I'm just going to draw a box from most of the body of this candle where price failed to ever close back within. So there's our first zone. And let's see, we're just going to color this to make it more easy for everyone to understand. So up here is where price, I like how I'm pointing at the screen in the camera. Like you guys obviously aren't going to see that, so noob. Anyway, if you look on the screen, you'll see price originally got rejected from here, and originally we thought there was going to be a V-shaped recovery, but we failed to reclaim this zone. We actually rejected right at this zone, thus confirming that it's going to be more likely that we come down and at least test the bottom side of the range to try to gain liquidity from there. So now we look at the bottom side of the range. We looked at where we bounced. We formed this nice wick on the lower boundary of support. We actually set an alert here for when we are coming into it again, because this ultimately is where we got our first reactionary bounce. Anytime you get major sell-off in the market tends to have a reactionary bounce, usually retracing about 50% of the overall move, which is exactly what we got. Then that's where the real play comes in, where consolidation comes in and you need to gain liquidity before moving higher. So what do I mean by all this? We need to mark off where we bounced, which would be this candle here, as the potential lows so far. Now, because we've failed to reclaim this zone up here, we are looking at testing the lower boundary down here. And where's the liquidity down here? Let's just draw a box on this first bullish wick, this kind of bullish hammer that we have. So drawing a zone on that candle wick there. Again, let's just color this, kind of give frame of reference. Actually, you know what? I'm going to drop a couple texts. Like, why is he typing so slow? Oh my goodness, he's the slowest typer. There we go. So this is the clearest way to outline my thoughts of the market right now. You need to reclaim the zone in order to be bullish, and you need to lose this zone in order to be bearish. Anything in between is just a range play. So if you sweep these lows and bounce in this zone, then you go long. And if you come back up and you reject from this zone, you don't reclaim where you originally broke down from, then you short. And on the daily, it would essentially just be a game of ping pong, playing ranges, if I can find the right tool, playing ranges where we just, we reject off the top and maybe bounce out the bottom before deciding to break out and go higher. Of course, it could break down and go lower, and we have our targets for each scenario. So moving on from that, now I want to look at one more thing. I did promise you guys a simple strategy when the market's bleeding like this and you don't know what to do. So we're going to look at something I like to call witchcraft and wizardry. And that is, you're going to go to indicators and you're simply going to type in moon phases. That's right, the freaking moon. The reason I like to trade the moon is basically because the factual evidence it provides. When we have a bullish moon, typically we get a positive few weeks, and when we have a bearish moon, which is the blue moon, we typically get a negative few weeks. And as ridiculous as it is, like I refer to it as literal witchcraft, as ridiculous as it is, it works. Just looking at these past few moon phases, let's look at the last 1, 2, 3, 4 bullish moons. What did we get? We got a bullish moon, upward price action. A bullish moon here, upward price action. A bullish moon here, this was a failure. A bullish moon here, this was a success. So 3 of the last 4 are positive. And if you look further back, you will keep finding instances where this is successful. So ultimately, playing this on a lower time frame is what we're looking for. Tomorrow is a full moon, which means it is a bullish moon. And guess what? We've had a bear moon play out exactly as planned to the downside, filling in the upper boundary of the range to the lower boundary of the range. Now we're getting heavy sell-off into this potential bounce zone, this long zone. We're actually getting volatility expand, which we like. RSI is in the bearish control zone. So that is the only thing, in my eyes, pointing to this to go lower. Do we just sweep the lows and bounce? I think it's quite likely that we could see that going into this bull moon. Something like this where everyone thinks we're going lower, we come back up, reclaim this zone, and then we start working on attacking that upper boundary. So as silly as it is, using the moons to trade is going to be one of your easiest and possibly most successful strategies. It takes out all the thinking. It takes out all the analysis. You simply short the bear moon and you long the bull moon. So hopefully you can implement that strategy. Once again, none of this is financial advice. Do your own back tests on this strategy. Decide what your own risk is going to be. But ultimately, I do think this is a buy the dip opportunity. So hopefully you got a little bit of dry powder to buy the dip. And anyway, I think that's going to do it for me. Nice, quick, short, and sweet update here. If you found any of this content valuable, I would appreciate if you smash that like button and subscribe. My name's Crypto Neil, and until next time, let's grow together. Peace.